Hey everyone, Charting Man Dane of the Chart Guys checking in on the markets. We had a big bear reaction to Microsoft guidance. We have Tesla earnings after hours. I'm going to go over something psychologically I've been struggling with as a trader. And before we get into the charts, we've got the final day of our course sale, 40% off. Link in the comments of this video. Check it out. So S&P 500, significant dip buying and ideal dip buying for the bulls because it was our first hourly oversold conditions since our significant 2-day bull move, and the bulls bought the dip very aggressively. And you can see on the hourly, make note, SPY had to hit hourly oversold. The S&P 500 futures chart, the hourly RSI dipped down into the low 20s, 24, and that's because SPY was a little bit behind it. Obviously, they're different as far as the number of candles and how many hours we trade. So SPY hitting hourly oversold is when the bounce got going. So if you bought the S&P 500 futures right when hourly RSI got oversold, that was not the ideal entry. It took a little bit longer to find that bottom. But from there, it was a very significant V-shaped bounce. We haven't confirmed the hourly uptrend yet, which we know that we will have to see happen for this to be a daily high or low. But it's a good sign so far. That's a check mark that the bulls need to have tomorrow. So just looking at SPY, we have to see on any consolidation, low of today must hold, and then the high of today must break to confirm the hourly uptrend. And if bulls pull that off, we're looking right back at the bounce high, 402.65, to try and keep this daily uptrend going. Very impressive. Nasdaq, same deal, hourly time frame. So I was heading into today saying, okay, there's a lot of weakness, and I'm open to the possibility that we could be seeing weekly lower highs being set. And I'm still open to that possibility, but obviously today another big win for the bulls. I was watching, I'm open, show me bears, prove it, but they didn't. The bulls proved it today. Took a little while to get the bounce going. We did start the morning with weakness, just downtrend, all for the first hour of trading, and then the first 5-minute uptrend with the higher low and higher high marked the low of the day, and then bulls didn't look back from there. So Nasdaq was the same thing. We hit hourly oversold, and again, V-shaped bounce, but we have to see the hourly trend change. QQQ holding daily EMA 12, and if we confirm the hourly uptrend, we'll be looking right back at the bounce high of 290.21. So Microsoft had a bullish, when I did the video yesterday, it was a bullish reaction to earnings. We knew guidance had not come out yet, and then once we saw guidance, it was all bears, and we dropped all after hours from there, and then we dropped pre-market even further. And we were down 9% from the high. But look where we bounced on Microsoft. Right off of daily support, everything changed. And I almost got stopped out. My swing position, I entered at 236 because of the daily high or low, and because I could then use that level as my stop. And that level held, I missed stopping out by less than $1 and a significant recovery. But most names, any name that went straight up from the low of the day, we've got to see that hourly trend change confirm into tomorrow for that follow through. Tesla earnings after hours. Initially bull, then giving it back. No reaction right now. We're trading right where we were trading the last 2 hours of the day. And so this is showing us that the market cares more about guidance and the conference call. And that was the same thing with Microsoft yesterday, because all the big tech names that have yet to report earnings, Google, Apple, Amazon, they look at Microsoft guidance and the market then starts to make assumptions. Well, if Microsoft is expecting a slow 2023, then all these other names can potentially expect it as well. But Tesla, at this point, it's a non-reaction. So we'll see once the conference call and guidance comes in if that changes. But for now, Tesla keeping the daily uptrend going. Anything above 124.31 is a daily high or low. And there are no red flags on this daily chart at this point. There were a couple clues. We knew to be looking for an hourly oversold bounce today. I did not anticipate that the bulls would just control the entire day, especially after the weak morning. But a couple clues. Number one, the dollar did not break bull. We know the dollar breaking bull would be bearish the markets, so there was no dollar strength. And number two, crypto held really strong. Look at what crypto's doing today. APT went up 50%, a bunch of names up double digits, and Bitcoin holding support. So this morning, 6, 7, 8 a.m., the market was doing nothing but dropping, and crypto was not. And so, how is that a clue? in my opinion, the highest risk, highest reward sector. If we're going to see bears take over markets in a meaningful way, crypto is going to drop hard. And we weren't seeing that. So just a couple little clues. NVDA and the semiconductors, extremely healthy. Daily consolidation started. The bulls bought the dip significantly. And it didn't even get to hourly oversold. So bulls front ran, meaning started buying before we dropped down to those levels. And bull flag attempts on the daily time frame for both NVDA and SMH. So what we're seeing now is 2 times in the last week of trading, bears come out and prove something, at least short term, this drop, and then the bearish reaction into the open. But bulls keep buying these dips. It's extremely notable dip buying. So the trading that I did today, and something I'm struggling with psychologically before we keep going here, is one thing I did very well today was exiting my shorts right at the bottom. I had the Riot swing, and I knew that I was looking for an hourly oversold bounce in Riot and MARA, so I exited my shorts right around 580 on Riot, which ended up being right near the low of the day. I was also on the morning, I shorted Tesla when Tesla broke 140. We saw some nice follow through because 140 was this base of support in extended hours, all these holds, and then the low of the day was 140.12. And so I thought, all right, well, if 140 breaks, I'm going to expect at least a little follow through. So I don't normally short a support break. If I do, I'm going to scale out half very quickly, which is what I did. So I short on the break of 140. I exited half in the low 139s. My break even is now in the upper 140, so I can at least let it play out a little bit further. And then as soon as we broke this 5-minute resistance, I stopped out the second half of the position. Small win, insignificant, but I did a good job of exiting bearish. And then another one, I think that was it. I exited bearish, great. I did not long the bounce well. I didn't long it at all. One thing that I'm struggling with psychologically is in my prior, let's say, 10, 11 years of trading, I'm all cash all the time. And every day, I do swing trades every now and again, but for the most part, every day is a fresh, clean slate. I don't care what direction the market's going. I'll play long, I'll play short, whatever. I like it that way. But now as I'm thinking bigger picture, I'm looking down the long term, bear market is the time to be buying long-term positions. My IRA position is the largest it's ever been by multiple times. And so I am having to deal with fluctuations in my account of multiple thousands of dollars, and it's impacting me because if I'm all cash and I exit all my shorts, I can go long, no problem. And then I try the bounce and I stick my stop under the low of the day and we get the hourly bounce or we don't. But when I have only long positions already open for 6 figures, it's almost as if, all right, well, if I enter now day trading longs on top of that, it's almost like I'm doubling down and going extra aggressive. And so my mindset gets switched into, okay, well, I covered all my shorts. If the hourly bounce plays out, my IRA is going to go up, and then I'll look to scout, hourly lower high bearish positions. And so that leads to me to miss the opportunity. I was talking pre-market on the live stream. I'm looking for the MARA hourly oversold bounce. And I'm looking for the Riot hourly oversold bounce. And MARA, I had too tight of a stop loss where I gave it an attempt. And I think my attempt was right around $8. And this double bottom and then tightening range was just a really nice tightening range that broke bull. And then we followed through from there. And then I missed the 15-minute high or low. I did a bad job playing bullish today as my IRA recovered from, negative 4 figures back to break even. So I need to get used to that. Or I need to move, my IRA into a different account so I'm not seeing the numbers. But even then, I'm going to know what's going on. So that's something that I am definitely struggling with because I'm going to continue to build my IRA. It will be even bigger than this, but I don't have the solution. It's something that I'm working with and going to have to keep working with. Fortunately, it's just money left on the table. It didn't lead to me losing money, but it threw me off from knowing I am scouting the MARA hourly back burner and missing that Very nice bounce. I did end up trying to short in the end of the day, or the second half of the day, and ended up stopping out 2 times break even. I tried QQQ short and stopped out. And then I tried Amazon short, stopped out break even by selling partial on the pullback, setting my stop above the high. If that's the hourly consolidation, I nail it. If it's not, I stop out. And then at the end of the day, I made one more attempt for a tiny loss. And the reason I'll keep trying is because it's break even. If I take a half day loser, I'm not going to keep trying that trade. So in the end, it was a nice day. You know, I think overall it was roughly a day maker. Yeah, roughly a day maker. But missed opportunity. So I'll keep you posted how I deal with it psychologically. Let me know if you have any tips on how you deal with it. But as someone who's been all cash for a decade and completely detached from what the market is doing, it is new. It's different. All right, XLV, right off support. We're watching this falling wedge. It's still falling wedgy. So drew this, I forget how many days ago, but it continues to play out. Every time I draw a pattern to keep an eye on visually, and then we bounce off support and resistance, the more we do that, the more that tells me, yeah, this is the pattern that you should be watching. It's very valid. And that's the case here for XLV. So still within the pattern, still not much going on. Watching for the break. It is a bullish pattern in the sense that it's a falling wedge where bears are lacking follow through. And just watching to see, is XLV going to join Team Bull and break this pattern bullish or not? XLF was a top watch for me today to see if the bears could prove to me that a daily lower high was going to form, and they couldn't. The bulls bought the morning move. We tightened up on the 5-minute time frame, and we did see a new low of the day, but held the low of yesterday, and then bulls took over from there, and we're right back looking at the high. So it's another sector. Is XLF, whoa. Is XLF about to join Team Bull? We've got a double top of resistance here. 36.26, 36.17, we're right there. And if we break to the highest level that the financial sector has seen in 9 months, 8 months, that's going to be very notable. IWM, daily lower high set, holding EMA 12, and now trying to follow through a whole bunch of resistance here as well. So IWM, if we can break 188.69, we'll essentially be taking out 4 resistance levels at once and confirming the weekly bull break of this tightening range. So we went from a very weak morning to now bulls knocking on the doors to some key resistances. Cannabis staying weak for the most part, but doing what most names are doing. MSOS US Cannabis testing all-time lows today. The weakest of the week. You're not going to find a weaker sector than this in the entire market. Testing the all-time lows. Zero benefit from the market bounce over the last few weeks. Weekly bear flag. Curious what our Reddit names are doing. GME is looking for the daily high or low. AMC got screwed up with that candle from yesterday. Biotech sector. Daily inside bar close at the high of the day. Still remaining strong overall, holding EMA 12. The simple statement, you want to keep it simple. If bulls are holding daily EMA 12, they have full control and nothing to worry about. Whatever individual name or sector you're looking at. Gold still grinding higher. Again, it's boring, but bulls will take boring. Slow grind up. Daily EMA 12 support. Silver still hanging around. Again, metals are not going to top out in any meaningful way as long as the dollar is weak. Silver recovering. Still a daily downtrend technically as long as 24.16 is resistance. But bears obviously not following through. And miners daily bull flag confirmed. Daily EMA 12 support guide. So miners and metals strong as long as the dollar is weak. Oil. Tightening range. Bulls have to form a higher low compared to 78.45. So we'll keep an eye on how that breaks. Energy was real weak this morning. Did they fully recover? They did. Broke the low of yesterday by a few pennies. V-shaped bounce. Again, tightening range, trying for the higher low. And natural gas still all bears. Again, not oversold in any meaningful way. Weekly is not oversold. Daily just barely. We've seen the daily get way more beat up than this. There's just nothing coming from the bulls at this point. It'll shift eventually. We'll get a weekly bounce eventually. But again, it's a falling knife at this point as far as I'm concerned. So I'm not trying to nail the bottom. $3 psychological support. And that is that. Hope you had a good day out there. Burden remains on the bears because bulls keep buying dips and they keep control. And we have a couple key resistances now in play as bulls try to follow through. We'll have to see what Tesla earnings call reaction is. But again, at this point, we can say it is not a bearish reaction. That may change, but that's all I'm watching for major earnings this week. And then next week is all the big tech names. But a sigh of relief for the bulls. They woke up this morning and said, uh-oh, we've got some things we got to be concerned about. But pretty much best case scenario. Prove it to me, bears. And you need to see the dollar break bull for the bears to be proving anything with conviction. If the dollar breaks bear, bulls remain strong. Do good things. Appreciate you watching. We'll see you tomorrow. Adventure time, we've got Natural Bridges National Monument now. Pretty similar to Arches, but just a little bit different. And there's a nice little valley with trails and paths to walk through. So another very picturesque spot with some very cool rock formations. And I actually ended up getting lost for the first time. I never really got lost. Definitely went the wrong way and had to backtrack sometimes, but I got lost, completely lost the trail here. And it was, well, these bugs are really cool. They're pretty much a mix between a giant moth and a hummingbird. And I couldn't figure out, is that a hummingbird or what is going on there? And I forget their specific name, but it is something that alludes to their similarity. But they were having a blast on these yellow flowers, getting their pollen and nectar. But ended up getting lost on this trail and stuck in a valley, essentially, in a canyon. So I had to scale the walls of the canyon to just get to the top and to be able to see things. And then ended up, I mean, by the time I had to go 6 miles out of the way and it was dusk, it wasn't the kind of thing where I was, fearing for my life. I pretty much knew worst case scenario, I'm going to be hungry and I'm going to have to sleep exposed out, in the open and deal with it tomorrow. But fortunately found my way out and ended my way back to the tent, exhausted, pretty much hiked twice as long as I was anticipating, but it was a good learning experience. So a really nice canyon walk, natural bridge. You can see where the name comes from. This is in Utah as well, Gooseneck State Park. Incredible river that, obviously has cut this path and just winds back and forth. And to just see time eroded like this, very cool. Another place where you want to time it right because I got there too early and was dripping sweat, completely exposed, waiting for dusk. But another spot where you just put your tent right there. There's nobody else around. Maybe there was one other RV that was sitting up there. Not a ton to do, but if you can keep yourself entertained with a book or with some music or with some ganja, it's a pretty good spot. But a really interesting geological formation. That's how I entertain myself. A little bit of modern art, leaving my mark. And that's that. So, after Capitol Reef was heading down, where did we go next? I think we're coming close to the end of this trip. And then we'll see what am I going to talk about at the end of videos. We'll find something. So have a good Friday night. We'll be back tomorrow with USMJ eventually. Going to go to Smoky Mountain National Park again on the way home, which is actually where this road trip, Chapter 1, started. So all full circle. See you then.